What if I told you there's a way for sellers to help buyers with the down payment and potentially make money doing it? Yep, it's possible. With the right setup, a seller can actually provide down payment assistance in the form of a second mortgage, and it can be a win-win for both sides. So today I'm breaking down how a seller's second mortgage works, the rules that apply, and why this little-known option could help move more inventory and make more deals work that otherwise wouldn't. Let's get into it. A seller's second mortgage is exactly what it sounds like. The seller agrees to lend the buyer part or all of the down payment. That loan sits behind the main mortgage as a second lien. The buyer makes regular payments on both loans. This is not a gift. It's a real loan with real terms, but it can help buyers with limited cash while helping sellers close the deal. Fannie Mae and Freddie Mac allow this type of structure, but only if the loan meets certain guidelines. Here's what's required for seller-held seconds to be legit. The loan must have a market rate of interest, so no sweetheart deals. So no balloon payments within the first 5 years either. No negative amortization where the balance can't actually grow over time. It can't be forgivable. This is a real loan, not a hidden discount. So no prepayment penalties or restrictions if the buyer wants to pay it off early either. And the buyer must fully qualify for both the first and the seller-held second mortgage. The key takeaway here is that this isn't a loophole. It's a legitimate financing tool when used the right way. What makes this strategy a game changer for the right buyer? Low down payments. So buyers can purchase with as little as 5% down. Eliminate PMI. So with 95% loan to value and a seller second, you might avoid private mortgage insurance entirely. Lower monthly payments. Structuring the financing this way can make the home more affordable. And then potential tax savings. So buyers may be able to deduct the interest from both mortgages. This could help buyers who don't qualify for traditional down payment assistance, but still need a little help to make the numbers work. Sellers benefit too, big time. So income potential. That second mortgage earns interest, creating a passive income stream. It moves inventory, so more buyers can afford your listing when the financing is flexible. Negotiating power. You might not have to drop the price, just structure the deal differently. It's still a sale though, so you get most of your money from the buyer's first mortgage. So it's a creative solution for sellers with equity who want to help buyers and close faster. Let's say a buyer has good credit, solid income, but they're short on cash for the down payment. The seller offers a second mortgage for 10% of the purchase price. The buyer brings 5% down, and the first mortgage covers the remaining 85%. So now, instead of walking away from the deal, everyone wins. The buyer gets the home, the seller moves the property and creates an income stream. There's no private mortgage insurance, so there's lower monthly cost and potentially better terms. So it's a powerful option that's underused simply because most people don't know it's possible. So if you're working with a seller with equity and flexibility, a buyer who needs down payment help, a property that's been sitting on the market, this might be the perfect solution. So talk with the seller about their willingness to carry a second mortgage, connect with a lender who understands seller seconds, and then get the proper loan terms documented upfront. This is still a real mortgage. Want to know if a seller second is right for your deal? Book a call with me today. I'll walk you through how it works, review the guidelines, and help structure the deal to keep it compliant and closing ready. And if you found this helpful, hit that subscribe button for more creative financing tips and strategies to close more deals. Click the link below, schedule a chat, and let's get your next buyer across the finish line.